as the Dow Jones Industrials took off on a fear-fed freefall to close down a record 508.32 points.
We've got record spending, we've got record inflation, we've got record debt, and we have an emerging war. And so I think the markets are more skittish than anybody is really talking about right now. So as I've been saying, at the beginning of this month, we kind of took off and it looked like we might have a beautiful Uptober, but then we turned right around and we were asking ourselves, okay, is this going to be a Downtober? Well, I see two major problems with the market that I want to highlight with you guys today. Even though the markets had a nice little up morning, the question is that going to continue? How much opportunity to the upside are we currently looking at, and what is the risk to the downside? Two problems that I see that I'm going to draw out in the next couple videos that I think are pretty serious and they just don't add up. When I looked at a report showing how analysts were raising earnings expectation going into next year quite a lot for the big tech companies, the Magnificent Seven, it didn't really make sense that they would be raising earning expectations and simultaneously that we would have Fed rate hike cuts. So they've priced in 3 rate hike cuts next year, while simultaneously saying that the market and all corporate earnings are only going up all throughout next year, which the two of those things side by side do not make sense because the Fed is not going to cut rates in a strong economy. The best that we could hope that he would do would be to hold those rates firm at bare minimum, if not raise them if we saw corporate earnings rising next year. So that's the first inconsistency in which it almost appears like the market's lying to us because the two just don't go hand in hand. And then the second inconsistency that I'm seeing in the market is that the bond yields, which you guys have been hearing about over and over again, which I've been saying that have been at a 15-year high, they're consistently climbing, but so have been stock prices. Bond yields don't go up alongside stock prices because people would go risk off and they would take money out of the stocks and put them into the less risk bonds. And so those are the two problems I have with the market. And I'm going to continue my theme from my last video, analyzing how big tech is doing in this correction. And we're going to discuss Meta, Amazon, and Google today. And I'm going to throw a brief thought in there about Tesla and Nvidia if I have some time. But I wanted to take a minute real quick and say this is the Stocks with Josh show. Thank you guys for hitting the like. Hit the subscribe if you're needing to get better insights as well as technical analysis on these markets. So here's the big question. How is October going to end up? Well, I want to take us back in time and I want to talk about a very bad October, which actually coined the phrase Black Monday of 1987. I'm beginning to see more chatter about Black Monday because one of the things that was happening in that fateful October was that bond yields and stocks were simultaneously going up and everybody said it didn't make sense. And in that October, on a single day, the market saw a 20% drop, and that's been called Black Monday ever since. And it was in October, which is historically a good month for the markets. And so I want to ask you guys this question. Would you be prepared for anything like that? Are you even imagining that that's possible? Are you in leverage? Are you in heavily stacked call options? What would happen if you woke up on a Black Monday free fall of the markets and you had all your money tied up in stocks which have been underperforming? Would you be able to take opportunity in such a massive market move? Because if you were in cash on such an event, you could actually profit by going with the direction of the market. And so these are the types of things I wanted you guys to consider today. Like I said, I'm going to dive into these topics and explain them a bit more over the course of this week. Guys, before I get into the technicals on these 3 big tech companies that I'm going to cover today, I want to remind you that I have a Patreon with the Stock Squad. That's Stock Up with Larry Jones. Keenan Grace, and Stockmo. And all four of us are feeding that Patreon daily with trade alerts as well as education. And we're letting you know the types of calls that we're doing as well as my analysis. You'll find it there. I'm going to get in there today after this video. So click on the link in the top pinned comment and join us in the Patreon to get more insights into this market. Okay, let's dive into Meta real quick. All right. Right off the bat, let's talk about where support and resistance are for Meta. I see support at around 309 to the 310 level. I see resistance for Meta at $325. Now, here's something that's very important that I'm going to point out to you guys on all three of the stocks I'm talking with you about today. And if you remember that when I covered the other three stocks in my last video, I told you guys that the market wasn't really supporting the big move down because there was low volume. Guess what we have today? We've got more choppiness with these three stocks, and even though they've gone up again on low volume, which means that there is literally no conviction. The market is basically chopping to the downside with low volume and low conviction. Then it's turning around and chopping to the upside with low volume and low conviction. Meta went up today. $4.61 on a negative 22% volume. So let's just take a big view of the charts right now. So we had a double bottom a couple weeks back at around 274, and that gave us the momentum to come up and essentially create a double top. Double bottom is bullish, double top is bearish. And so now we came up and right around 325 zone, we got a double top. We went up, we lost steam, and now we're coming back down. So let's just talk about the momentum of Meta right now. Overall, it's been in a nice upswing. But if you go into the RSI, which measures momentum, you see that it's actually been showing extreme bearish divergence. What is bearish divergence in the RSI? It means that the momentum is not increasing as the stock price goes up. If the momentum was increasing when the stock price was going up, it would mean that there's a lot more room to go much higher. But if the momentum is decreasing when the stock price is going up, it means it could be signaling that the buyers are drying up at the top. And right now we saw that buying did dry up around 325. We had extreme bearish divergence on the RSI, but the good news is as of now, the RSI is still in the bull territory, which means that we could continue in this uptrend for a little while longer, but we need to be aware of the fact that we're getting clear signals with volume and momentum that the upside move is absolutely slowing down. So I would be watching for an RSI breakdown beneath the 50% mark. And in that regards, I would see that we could actually come all the way back to 274, which would be the bottom of the range. But in the short term, you could ride calls above 320, or you could ride puts below 310. That's the way I'm going to play it. All right, let's dive into Amazon, and we're going to keep it super simple. We've seen that the Amazon had made a near local high over 2022 price. 2023 was a great run up for Amazon, but right now support is at $129 and resistance is around $134. And like I said, volume today is down 23%, so a real lack of momentum to the upside. And I want to point out three dominant candles that we've gotten on the weekly time frame. Two of them are clear rejection candles. And so here up at the top, where momentum is slowing down, we've got these very dominant bearish candles. They're bearish because they've got tall wicks on top, which are showing price rejection over the course of a week. These are weekly candlesticks. And then the other third dominantly bearish candle is this very tall red candle, which shows that the buyers took control and sold heavily on that week. So we've got three bearish candles that are concerning in Amazon. But there's always still potential to the upside. The direction has not been determined just yet. I still think there is a potential to backtest as high as 137, but it's becoming less and less likely. It would take something significant to push us up there, perhaps a good Q3 earnings, I don't know. You could go long above 132, and you could possibly enter into shorts as early as 134 with an extremely tight stop loss, but you would be be safer to enter into shorts beneath $125 to go as low as $116. I see that if you span out over the course of time, we have a local resistance level in the past at 114. That was a local resistance. And so now that we made a new high above it, if we come all the way back, we may find support where we once had resistance, which is right around 114. So we've got support for a long-term play to the downside of 116 or 114. But as I said, I would only go short on this for a close beneath $125. All right, I want to dive into Google, but before I do, if you need better trade tools and you're looking for some free stock, check out the investment app called Moomoo. This is a zero-cost trade platform which is available in the US, Australia, and Canada. And here in the United States, they're offering up to 16 free stock to open and fund an account. Click on the link in the top pinned comment to get that offer, to get those free stock, and to start trading with better trade tools. All right, let's dive into Google. We've got support at 137 and we've got resistance at 143. And so we're getting a little bit of price compression at the top of the range. We had a pullback to support. We're turning around back to test potentially resistance at 140 to 143. The volume today is also negative on this up move, which means that there is low conviction back to the upside. One of the things that was bearish is this last week we had this upward ascending support line that we did break below. So now we're below a trend line, which means that that current move up may have changed. Now, if we want to go bullish on this, I see that if it were to close back above 143 with volume, then we would get a new target of 150. But I will admit that it's starting to look a little bit less likely to me, but you got to keep yourself aware of that. For a local support or a smaller play would be a close above 141 for a move up to 143. But at the moment, I'm not swing trading Google. All right, I'm going to throw just a couple thoughts more here on Tesla and Nvidia. Guys, obviously we have Tesla's earning this week. We're getting some pretty bearish setups on the chart. We've got a bear flag that's starting to form and we potentially could be breaking down. But we know that Tesla is the type of stock that loves to fake you out. But I want you guys to be aware, don't get too perma-bull on Tesla because at the moment the charts are saying something otherwise. They're basically giving us some bear signals. It looks to me like we're back testing the point of control that I gave you in my last video, which is right around 255, 256. If we got rejected there, we are then potentially going to be going much lower. We would need to see a strong break above 256 to get excited about going bullish right now on Tesla. A confirmation of a larger bearish breakdown move would be a close beneath 250. And then for certain, we may be signaling that we would then go down into the low 240s. And so that I wanted you guys to be aware of. That's what I'm keeping my eyes out for. Again, bullish if we get a close with volume above 255, 256, bearish for a close beneath 250. Now, I will tell you guys that Nvidia is also looking kind of bearish, and I am in some starter puts right now, and I would enter or scale my position if we got a close beneath 450. That's it for you guys today. Again, I'm going to be diving into this concerning scenario about what I'm seeing between the bond yields and stock prices. I'm going to recap and dive deeper into the Black Monday scenario to see how realistic is that right now for our markets. I'm looking at my big trade account, my long-term investment portfolio, and asking myself, am I prepared? At what point would I pull the trigger and possibly cash out? What would I need to see from these markets to take such a serious position? Because obviously there's tax problems that would arise from such a decision as that. I don't want to panic anybody, but one of the things that you know that I do is it's very important to mentally explore the entire bearish scenario as well as the bullish scenario, understand both of them and understand how you could profit from both of them, but then you've got to make a decision about where you're going to take your risks and what you're going to do. I'm playing that out with you guys. I promise I will share more on that in the coming days. Find me next in the Patreon. Click the link in the top pinned comment. Hope you guys have a great day. Hit that like, say hi in the comments, subscribe to get the next video. Peace and blessings. We'll see you soon.